Hi guys, welcome back to the channel, welcome back to a new video, and today is really an emergency because if you have opened up your phone or any website that's about markets, then you see that everything is crashing down right now, and it is at a horrible moment after we had a textbook breakout yesterday on the news of the Fed, and today we're giving everything away again. So without further ado, we are going to look straight into the charts so I can tell you what the crucial levels are right now, where we're looking at. So let's get started. Of course, we're starting off with the BTC USD pair here on the 4 hourly. And to quickly recap, this is our breakout from yesterday. We had the retest textbook and then we went higher, absolutely perfect. And then we went a little bit sideways, and I said yesterday, well, actually I want to see this cool off, maybe go to a golden pocket and then going higher. That will be absolutely perfect, and also continuation of this textbook breakout. That will be very nice. We did not only hit the golden pocket, we just completely retraced, and as you can see, we are right now trading below this falling wedge right now, so that is absolutely ugly. We also had a blood diamond here on the 4 hourly. These usually play out, in other words, they usually have a continuation of the further downtrend. Also here on the DBSI we see a 22 on the bears. And here at the market side B we see the RSI pinching down, coming together. A red dot VWAP is turning over and the momentum wave is turning over, and the money flow is just bouncing off the zero line right here, now going lower, so that looks absolutely ugly. Yes, and for the target, of course, when we broke out we had the 42k level as a target. That will be the top of the wedge. That will be also the measured move of this falling wedge. Of course, that is right now off the table, and we could say, hey, you know what, maybe then we need to measure now the bottom, the breakout on the downside of this falling wedge, which would be, let me take a measured move from this one to this one. That will be 33-ish, 33k, yeah, 33,600. That will be kind of then the target for this move. That would also coincide with the fact that we said, hey, you know what, maybe we need to have 3 touch points in the low 30Ks. I have been saying this already multiple times. 3 touch points in the low 30K and then going higher. Why is that significant, or why is that important? Because that would also coincide with the 3 touch points that we had here after this bear market and then going higher. We had 1, 2, 3 touch points. Here we had 1, 2, and now this will be the 3rd touch point if we are going low, and that would also then coincide with our target. If we would even break this, just so the low 30Ks, then of course 20K is back on the table. That will be the test of the top of the bull market in 2017. Right now we're absolutely not there, and to be honest, I really don't hope so. I'm not counting on it. But if we would now touch the low 30Ks then going higher, that will be definitely be in the cards. If that happens, then also of course this will take a little bit of time, but also then this blood diamond scenario with the money flow going to the red and continuation for a little while, bit 100% respected, and then you see that we just have weeks in a row where we're going lower and then going higher. That would all still be pretty much okay. Quickly back to the 4 hourly. As you can see, we are just opening up a new candle. 23 on the bear side, so that is pretty ugly, and I think I'm seeing a 5 on the bull side, so it's just very ugly. Would I jump into a short right now? No, because as you can see, we already dumped down today approximately 7.5%. That is way above the daily average. So yes, this can go lower, but if this would, let's say, do a little bit of sideways action, then go lower, then you maybe then you could entertain a short, or maybe just make some sideways action, lower time frames, maybe a W pattern, and then going higher. That would also be fine. If we are suddenly closing the daily, let's say above here the white line, so this support line is the bottom line of the falling wedge, then we might have a little bit of a scenario where we could range and then going higher. To be honest, I don't think so, because in this 4 hourly candle we completely retraced the move of yesterday. So yeah, to be honest, I don't really see it happening. I would just be very careful right now. Would not jump into a long, would not jump into a short. Let this thing play out for a little bit. Yes, you will miss most of the move, but risk management is rule number 1. And talking about risk management, I want to be completely transparent, because yesterday I said, you know what, maybe I will open up a short after this pump of the Fed. What we were looking at was this pattern right here. this is a higher high on the price and a lower high on the momentum wave, and I said, you know what, maybe I'll put it in a short and play until the golden pocket. That will be perfect. But I had a trade open, so a short open around this level right here, and it didn't get hit during the evening. So I thought, you know what, I'm just gonna cancel this order because I was afraid that it will get hit. Maybe even the stop loss that I will put above this candle then, and then we're going lower, and then of course it will be a losing trade, or that we would even hit that stop loss right away and then trading higher, because then we would have a consolidation in a factor of time. The RSIs and everything are resetting a little bit because it was overbought, and then we are going higher again. Then we're just having this kind of stair-stepping higher momentum up to the 42k. That was the target of the falling wedge breakout. That didn't happen, and of course now 2020 in hindsight, I can hit myself against the head that I didn't kind of keep the trade open, or just kind of FOMO in here around these levels, because man, I would have absolutely made bank if I would be in that trade right now. So yeah, it is sometimes what it is. Like I said, risk management is rule number one. So that's why I said it's probably better if I close that position or just cancel that position and not open it. Then quickly head over to ETH. Also, of course, a complete bloodbath. One thing that is a little bit different is that we are not underneath the support right here, so the bottom line of the falling wedge. Of course, if BTC will roll over, then I think this thing will also roll over, and then of course we have the same price target that we take the measured move. That would be then approximately, let me see. Oh, that's right at our support. Oh my god, lordy, it looks right at our support resistance level here at 2420. That will then be the target, 2420. For BTC again, the target would be, the target would be 33,700, top of the bottom of the falling wedge, and then this would be the 2420. That BTC is, and ETH is dumping down, is not the only one. Look at this, the S&P 4%, Nasdaq 5%, Dow Jones more than 3%, absolute bloodbath. And I stated this on Twitter, I think it was last week, where I said this momentum in the stock market that we're seeing right now, going up 1 or 2% a day, and then going down 2-3% a day, multiple days in a row, going up a little bit, going down, going up a little bit. This reminds me exactly of the credit crisis in 2018. I was studying at the time, and I saw how the whole financial world was just crumbling down, everything was on fire, and it was almost the end. And this slow grind of 1 or 2% up, multiple percent down, 1 or 2% up, multiple percent down, that just went on for like a year, 2 years, until we bottomed out, and it looked super dark. We are definitely not at that moment right now, but the way that the market is behaving right now, it reminds me a lot of that. Now, they say a lot of times, future never repeats, but it rhymes. It could be. No one will know where the bottom is, but this looks pretty ugly. And like we have seen in the last few weeks, is that crypto is following the market quite a lot. So sometimes we have a high correlation with gold, sometimes we have a high correlation with stock markets. Right now it's with the stock markets, everything is selling off, and therefore also high risk positions, high beta as we call it. So that's crypto, something goes up a lot and goes down a lot. That is then also being sold off, and therefore we also see this high correlation and this sell-off in the crypto. Alright, I hope this was useful. Like I said, it's really emergency video, so please show your appreciation. Hit that like button, subscribe, click on the bell, click on also so you don't miss anything. Leave me a comment, share this video with your friends if you think that's useful. Also in the description you'll find 2 links to my Instagram and Twitter. Feel free to follow me there. There's also a handful of affiliate links, feel free to check them out. In the meantime, please follow me on Twitter. I'm updating you multiple times per day with something that I see in the charts, or let's say traditional stock markets or whatever. So it's really useful to check that out a few times a day. Like I said, I'm posting probably somewhere between 5 and 10 times a day. So definitely check that out. Thank you guys again so much. I'm gonna keep this short for now. Enjoy your day. Be very careful. We still have a full trading day ahead of us, so be very careful. And if I have another update, I will update you as soon as possible. Thank you guys so much. Bye bye.